For these punters at the Melbourne Cup, a lot was riding on the Reserve Bank's interest rate decision.
We've probably had like a 45% increase on our mortgage rate repayments. So it's been a struggle, yeah, because it kind of cuts into sort of leisurely money that we would usually use.
It's a lot harder these days now with everything else going up, food and fuel and all the bills and everything.
Clearing the inflation barrier is no easy feat.
So I don't even know who won.
The RBA governor is more focused on tackling underlying inflation and still can't rule out a rate rise.
We do think that there are still some risks on the upside. We can't rule anything in or out.
As expected, the Reserve Bank kept the cash rate on hold at 4.35%, its highest level in 13 years.
What this means is that rates haven't gone up since last Melbourne Cup day. So it's been a year now since rates last went up.
And we are absolutely at the back of the pack in seeing reduction in interest rates. We've seen them in the US, in the UK, in Canada, New Zealand, Europe, elsewhere, but not in Australia.
The Reserve Bank sees inflation dropping slightly faster than it previously forecast, and Michele Bullock says it doesn't need to fall within the target range of 2 to 3% for the central bank to start cutting rates.
Most central banks are easing the restrictiveness in their policies, even though they're not quite back to target yet, because they're confident they're getting there.
While other central banks have been cutting rates aggressively, the Reserve Bank has been marching to the beat of its own drum. But it's been doing that since inflation started flaring up years ago. And because we didn't lift rates as high as other countries, inflation has been slow to come down. But still, rates are lower compared to other nations like the US, UK and New Zealand.
Two very simple reasons for that. Inflation in Australia is higher, our labour market is stronger.
Economists say borrowers will be waiting until next year before any mortgage relief comes in.
I still think first half of next year it's likely, but we shouldn't be holding our breath for a lot of interest rate cuts in Australia.
Given that they haven't changed their hawkish tone that we got from in the post-meeting statement, I really don't think we can expect any rate relief from the RBA until about May of next year.
The governor wouldn't be drawn into forward guidance for next year.
We will try to make sure that we're tuned in enough that if things start to turn down more than expected, that we're ready to act, but we don't know.
With rates staying higher for longer, Australians with home loans are being advised to seek out a better deal.
A complacent borrower is on an average rate of 7.11% as an owner-occupier, yet the RBA data shows the average owner-occupier on a variable rate is actually paying 6.35%.
CanStar's Sally Tyndall says the banks typically reserve their lowest rates for new customers.
There are 34 different lenders offering at least one variable rate under that 6% mark, so it is well worth looking at the refinancing numbers, particularly if you've got at least 20% equity up your sleeve so you don't have to pay lenders' mortgage insurance.
So it pays to switch lenders to minimise the mortgage pain.